you ever wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M Plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hello, good evening, everyone. Okay, thank you for joining us today. First, before I start, can I test the mic? If let's say you're able to hear my voice, can you just leave a comment whether you can hear my voice clearly? So if let's say you're able to hear my voice, then probably you can give me a comment below so that I'm able to check the voice check. Okay, I hope that everyone have your dinner ready. Okay, thank you for joining us today. I'm Joe here. Today we will be talking about the technical analysis risk ASMR of ACE, which is the stochastic indicator. Okay, so previously we have talking about the accumulation and distributions. So today we will be going to the stochastic indicator. So let me introduce myself. My name is can you see my slide? Okay, so let me check my slide first. I think that my slide is not open widely. Okay, I think there's some technical issue. Let me fix on this here. Okay. I think now would be better, right? The slide. Okay. So right now, let me introduce myself. I am Joe. Joey Chia. I'm from Kang Valley Dealing Team. So thank you for joining us today again. We will be talking about the stochastic indicator by today. Okay. So this is the indicator which you can do for the overbought and oversold. Okay, let me do a short disclaimer. So this idea was expressed slowly, the opinions of the speaker, and the content of this slide is provided as general information only and should not be taken as investment advice. All the contents shall not be taken as a recommendation to buy or sell any security or financial instruments. So any actions that you take as a result of the informations, analysis, or commentary of these slides is ultimately your responsibility. So please consult your investment advisor before you're making any investment decisions. Okay, now we will be talking about the overbought and oversold today, and introductions of the stochastic and the use of the stochastic indicator. So I hope that every one of you have heard about the stochastic indicator, and I believe that some of you come over here because you don't understand what is stochastic indicator. Okay, so we will be going through overbought and oversold meaning, introductions, and how we can use stochastic indicator in our technical tradings. Okay, what is overbought? Okay, in this kind of situations, in this kind of market, I believe that this kind of market, we know that currently market is very slow and very weak, and most of you suffer from the resistance and support of pricing, everything, and you don't know when to enter and don't know when to exit. So stochastic indicator is one of the technical analysis for you to reference, for you to use on which kind of patterns you are under it and how you can do it for the exits and entry for your trading. So what is overbought? Overbought is the price when the price is relatively high. So you can see at this kind of chart. Okay, you can see from the chart here, from the red color box here, you can see overbought happens when this chart when the particular stock is actually in a distribution patterns. Okay, when the distributions at the higher level, at the resistance level, it will be pulled back. And at the selling pressure is very high and the price is relatively high. So we call it as an overbought regions. So this is what as overbought. Okay, and vice versa for oversold. What is oversold? Just now we said that distributions is the overbought regions, but for oversold is where it accumulations happens, which we say it as a oversold happens when the price is relatively low. So this is what as meaning of the oversold. Okay, go back to oversold and overbought, how we can relate to the stochastic indicator. Okay, later on I will explain how we can use overbought and oversold in the stochastic indicator. So just brief introductions to the stochastic. First, stochastic was developed in the late 1950s by George Land. Okay, and stochastic is a momentum indicator that shows the location of the close relative to the high-low range over a set of periods. So this is what we call as a stochastic. So it consists of two main lines and two horizontal lines. One is the overbought line, oversold line, stochastic K, percentage K, and SMS or the percentage K or percentage D. So this is the line that we have. Later on, I will show you how we can do it, how we can see and how we can identify the oversold and overbought line and regions in the chart. Okay, the stochastic indicator is actually scale between 0 to 100. So that's why when you enable your indicators in your charts, no matter it's a trading wheel or in your Wizline, Wiz Pro, or Chart Nexus chart, then you will see when you enable it, you will see a scale from 0, probably from percentage 0 to hundreds. Okay, the reading above 80 is actually indicates that the stock is trading near the top of its high-low range. So it signals that the stock is overbought. So just now we mentioned that overbought is when the price is relatively high. So that's why we say it has a overbought. So when stochastic indicator showing you above 80, then it means that it's a overbought regions. Okay, but when the reading is below 20, it indicates that the stock is trading near the bottom of its high-low range. So it signals that the stock is oversold. So when the reading of the stochastic is 80, it overbought. 20, below 20, it's oversold. So just remember these two things, okay? 80 and 20, that's all, okay? This is for the stochastic. This is a chart that we have from the website. So I extract out parts of it to explain for you. Okay, from the chart, okay, you will see the line from 80%. Just how we mentioned that 80 is actually an overbought region. If let's say above 80, it will be a overbought regions. Okay, so this is the line number one, which is the overbought line. And when it's above 20, below 20, it will be the oversold. So it will be consist of two line, two horizontal line, which is the overbought and oversold. Overbought is 80, oversold is 20. So that's simple for the stochastic indicator. So stochastic indicator formula is actually consists of these three things. First, the percentage of K is actually equals to the current close minus the lowest low, divide by the highest high minus the lower low times 100%. So it will derive into the percentage K, which will be defaults into our system. So if let's say you don't know how to calculate the formula, don't worry, because it's all default in our system. You don't have to calculate manually. You just have to click it and enable it in our system. Then it will be showing out all the default system. So you don't have to worry that, hey, so if let's say I don't know how to calculate it, how? Can I do it through manually or else? No, you just click on the buttons and then it will show you all the reading that you want. Okay, next will be the percentage D, will be the 3 days moving average of the percentage K. So actually all these figures and all these figures or the moving average periods of the formula can be amended, but by default, it's actually on 14th 3 3. So this is what as a stochastic indicator. So the default setting for the stochastic is actually 14 days. So a 14 days percentage K would use the most recent close, the highest high over the last 14 days and the lowest low over the last 14 days. So this is very complicated for some of you, right? So I think I will just go explain through how we derive this kind of stochastic indicator, how we come up with the percentage, how we come up with the line, the blue and red line. Okay, so this is the formula behind it. So you can study it if let's say you have interested to know more. Okay, the percentage K is D is actually a 3-day moving average of percentage K. So it actually acts as the trigger line. So later on, you will see the charts over here again, which the charts. Okay, percentage 80% is the overbought regions, 20% is the oversold regions. Okay, so remember these kind of two things. Okay, then you will be able to find out the overbought and oversold region later on. So the line number 3, you will see the dot line, the black color line, you will see as the stochastic percentage K. So if let's say you don't understand which line represent which of the flowings, which of the indicator and which of the percentage, you can refer back to the charts. It will be written in the charts, okay? So the blue line will be the SMA of the percentage K, which is the percentage D. So for the red line will be the SMA of the percentage D. So later on, we will be focused more on the blue and red color line. So just to mention to you, all charts will have different kind of interpretations. So if let's say you think that when you open up your charts, you look at your charts of the stochastic indicator, you will find out why some of the charts, they have different patterns. Like for example, in which slide, the blue color is a represent of the SMA of percentage decay, which is the percentage D. But the red color is indicate the SMS of percentage D. So these kind of charts, they have different interpretations. So if let's say you find out it's different, no worry. You will just have to know this kind of thing is that you know the overbought and oversold, which is the 80 and 20. And then you know the percentage K and percentage D. That's all. Okay, this is the main things that you have to know, which is the blue and red line. So normally it will be in blue or red, and the ST and 20 will be fixed. So this is an example that we have from which slide. So every one of you who are the M plus user, you can attract it out from our website. So no worry that you don't know how to attract it out. It's actually free, and you can just enable it into your charts. Okay, just right click your mouse and then in the platforms, and you choose which line, then you will see the indicator here. It will come out as a thing like this, and then you press on the indicator, and then you enable the stochastic, and the stochastic is actually default for you. Okay, you don't have to amend anything unless you say that you want to amend the periods, then you will just amend on the settings. But everything is default. The K period will be 14th, the D period will be 3, and the smooth D period will be 3, which is the one that we have an upper limit and lower limit, which will be 20 and 80. So all this thing is fixed and default. So you don't have to do anything, just click on it, enable it. Okay, so this is what we have from the slide. Okay, the use of the stochastic indicator. Okay, this is very important. So why we are here, because we want to know what is the use of the stochastic indicator. So basically it's very easy to understand that stochastic indicator is actually making of the overbought and oversold system, and it's a momentum indicator. Okay, so first, stochastic overbought or oversold. Okay, just now I mentioned that overbought is actually where the price is trading at relative high. So we can see over here, an overbought stock is actually the price is trading at a relatively high. So when the stock is overbought, it usually expected the price to move lower due to selling pressure. So it's very common sense, right? So when overbought, it's meaning that the selling pressure is high, the seller is very high. So relatively, and when selling pressure high, the price will drop. So this is what we call as a overbought, because they have overbuy the stock until the top of its resistance, and it might be pullback, and distributions happens, it pull back. Okay, this is what we say as a overbought. Next will be oversold. An oversold stock is the price is trading at relatively low. When the stock is oversold, it usually expected the price will move to a higher level due to buying pressure. So vice versa to the oversold is when the price is trading at relatively low. So buying pressure high, meaning that more people is buying the stock. So when more people buying the stock, the price will be trading higher and higher. So in this case, when oversold happens, okay, they will attract the buying interest, and then buyer come in, buying pressure high, and then the price will be going up. So this is what as oversold. Overbought and oversold, this is the meaning of it. Okay, basically the trading stochastic reading below 20 is oversold, and above 80 is overbought. So this is what we have to remember. Stochastic 20 is oversold, 80 is overbought. Okay, why I always keep on repeating on 20 and 80? Because I scared that those who are just come in, they don't know what is 20 and what is 80. So this is the most important thing that we have to remember in stochastic indicator. This is a very simple indicator, but if let's say you want to use it, you have to remember the things, which is the line and the numbers, and how it can identify as overbought and oversold. So look at case study 1. What we have to do is that we look for the oversold regions. Okay, first we look for oversold regions. Remember that I said that just now, 80 is overbought. Below 20% is the oversold. So here, from the chart here, we cannot see anything. So in this case, we have to identify where is the overbought, where is the oversold. So when we calculate as oversold, we can see from the April, you can see on the arrow here, on April, roughly like 1st of April to 5th of April is actually an oversold period here. Okay, and on until the 3rd of May, you can see that is actually they trading up to 50%, but it's lower than 0%, but it's lower than the the middle line is actually 50%, and it's trading around here lah. Okay, So if let's say they're trading below, it's still in the oversold percentage. Okay, so look for the oversold regions. First, we plot out the oversold regions. Okay, and then we look for the support level of it. Just now we mentioned that the oversold region is actually on the 29 of the, let me draw it out. It's actually over here and over here, right? So we look for the support level. We look for the support level. Where is the support level for the oversold regions? This is the support level. So when you see from the trading periods, it's actually they're going up. They distribute here, distribution and accumulations. So who have joined the class last week, you will know. Last month you will know that when the price is trading at high, is actually at the distributions, and once they meet the resistance, but they're not able to break out with. We can consider it as a distribution mode. So when it at a distribution mode, it will be pullback. One is pullback. We will consider the lower low, okay, the lower low, the new lower low as the support level. So when you see, can you see the chart here? It's actually trading here, and they go back to the lower low, and they're trading again, and then they pull back again. So this will be the strong support level for this chart, which is Maybank at the periods of 2021 March. Okay, so just now we have saying that we look for the support level, right? So when we look for the support level and the oversold regions, we can see that, oh yeah, this is the oversold regions. And here, when you see the price not going up and retesting the support and forming a strong support over here, we will be monitor for the breakout. Okay, so where are we going for the confirmations? Okay, where are we going for the confirmations? Support line, just now we draw support line. Once we will be enter once it have crossed above the 20 level, 20% limit, meaning that it go up to the 20% limit, okay, and it break the resistance, then we will be enter at this kind of level. Okay, we wait for the confirmations whether it close above. When it close above, we might be going to enter it at here. Okay, this is why we say that when during the oversold periods, we might have to monitor for the breakout. We might have to monitor for the breakout and the reversal confirmations. So in here, we can see that it's actually a reversal confirmations, right? At here, they get up, and here, they're going up. Okay, so I think I just erase all first. Okay, again, I draw it out again so that you all can have a look here. Okay, first, what's the confirmations here? Okay, we have the support line just now, right? We have the support line. And then we know that this is the oversold regions. This is the support. Okay, this is the support around like 7 ringgit 80 cents. This is the support. Okay, when here we see that when it's trading the blue, okay, we focus on the blue and red line here, which is the percentage D and the percentage smooth percentage D. It will be percentage K as well. So we focus more on blue and red line. Okay, so when blue and red line, they're actually trading above 20, which is the oversold period. They pass through the oversold periods. We will be trying to enter over here. This is the candle. Okay, we'll be trying over here, and then if let's say we wait for the confirmations, okay, this is the confirmation that we want. Okay, so if let's say you enter over here, congratulations, you will get probably a few bits over here. Now this is the confirmation for oversold. So when do we sell it? When do we sell it? We'll sell it with until it ends to the overbought periods. So this is the place that we sell it. Okay, so entry level and exit level. So entry when oversold, they pass through 20 levels, then we enter it, but it go down to they go up to the overbought level, and we might be taking profits. Okay, this is what we say as the oversold regions. Next case study. Okay, we go for the overbought regions. Same, we use Maybank. Looking at the overbought and oversold regions, just now we're saying that the periods were, the last case study is actually the periods of 29 to the period of 3, right? May of 3, 3rd of May, and the 29th of the April. So this is the support level and the oversold level. So now we identify the overbought level. So we look for the overbought regions. This will be the overbought regions. Okay. Why I said this overbought region? Remember, above 80 will be the overbought and below 20 will be the oversold. Okay. So second, we look for resistance. How we can look for a resistance? We plot a line. Okay. Identify your own resistance. We'll make the resistance as we use the higher high of previous higher high and we get the new higher high. Okay. You can see from here, there's actually the new higher high. Why I will use this as the resistance is because they are not able to break through and the trading is actually statements at the resistance level. So in this level, we can say that as a distribution level. It's not going to break out the highest high, the trading along it and testing again, but the buying pressure is not good, so you're not able to break out above. Okay, although it break out above, it's still not maintained. You're not able to maintain, then you pull back again. So this is the distribution level that we mentioned. So just how we said that here is the overbought. Okay, here is the overbought regions. Okay, stochastic showing is overbought. Okay, and we have confirmation reversal. Okay, so this how we're saying that this will be the, sorry, my drawing is very bad. So let me draw again. Okay. We draw the resistance line, right? We draw the resistance line. The showing that it's overbought. Just how we bought it at the price, assuming we bought it at the price of 7 ringgit 80 cents, 7 ringgit 86 cents. Okay, we bought it at this price. So once we go to the resistance level and it comes to the overbought regions, right? You come to the overbought region. So at this point of level, you think that it's actually coming to distribution level. So and the stochastic showing that is actually overbought. So you would think that if let's say stochastic is showing you there might be a selling pressure here. How we can confirm the exit level? We confirm the exit level when the stochastic indicator, the blue and red line, is actually close below the 80%. So this is the price that we can, this is a timing that we can use to take profit first. Okay, so from the stochastic level, we can see that it's actually overbought regions and you pull back to the oversold regions. So meaning that the selling pressure is very high. So you can exit at this level, take profit first, secure a profit, see money, take money. So this is the way that you can use to enter and exit. Okay. Next, we will go to next case study. Okay. First, remember, look for the overbought and oversold regions. So first, we're going to use Dufu as a reference. Okay, we look for the overbought regions. Where is the overbought regions? It will be on the February of 15th, something like this. Okay, the FHE trading above 80 and its statement above 80 stochastics. Okay, and once we look for the overbought regions, we look for the resistance. Okay, how we look for the resistance is actually based on the higher high and distributions. Once it's not able to break above 80, not able to break above the resistance, and you're showing that is actually having a reversal candlestick, then in this case we will be identify it as a distribution level. Okay, so after you look for the resistance, you will know what to do. We will wait for the reversal confirmations. Okay, reversal confirmation meaning that the candlestick is actually showing you that in overbought regions, okay, in overbought regions at the period of 15th of February, is actually in overbought regions and it closed below 80. The blue and red line is actually close below 80. So it's showing you that the selling pressure is getting higher and higher. So meaning that there might be pullback formations. So in this level, you might taking profits from, probably you buy it from the top, from the bottom to the top, and we will be profit taking. Okay, you'll be taking at this level. Probably you will not be sowing at this high level at the resistance, but when you saw second day, you saw that the stochastic is actually crossing down 80, and the candle is actually showing you a pullback formations, then you might be profit taking over here. This is very useful in the ranging trends, but not in the upward trends. Okay, because stochastic is quite sensitive to the pricing, so you will have to add on with the resistance of yourself, and then you have to add on with the volume and everything. So this is the use of the stochastic for you to identify oversold and overbought, and when is your entry and exit level. Next, case study 4. Okay, look for oversold regions. This is twofold again. Just now we're saying that at the period of the February, here, right, just now we have been overbought over here, and we have been taking profits at this kind of level, at this level. Yes, and we're showing that it's actually dropping, and you will see that it's actually dropping as well, right? So this, you can see that it's actually, we look for the oversold regions. Okay, where is the oversold regions? And you ask, okay, this is a question. So you ask yourself, where is the oversold regions? Okay, oversold regions will be below 20, which will be the oversold regions. How I can identify it as a oversold regions? Okay, below 20, we assume it as a oversold regions. Next, we look for support. Okay, we look for support at the oversold regions is during 8th of March, right? So the support we see at the 8th of March is actually roughly like 3 ringgit 20 cents. 3 ringgit 20 cents. Okay, at this kind of level, at this level, they are not able to break through the support. It's forming a strong support over here. They're running statement as this level 3.2 for a few days, and you're not able to break down for forming a lower low. So we're assuming as a oversold regions, okay, oversold regions and strong support. Okay, in this level, when are we going to go? When are we going to enter? Okay, oversold, and when we have the support level, when are we going to enter? Just now I mentioned that we're going to enter when the blue and red line is actually closing above the 20%. 20%. One is across above the 20%, we can give it a test. We can give it a test. Or either we can wait for confirmation, meaning that you can see that the volume is actually getting low, right? We wait for the volume. Volume come in, okay, we test it. Okay, yes, we go in. If let's say we think that is actually wrong and a false breakout, we will be cutting loss as the 3.2 level. This is what we can assume using the stochastic indicator. And after this, you can see that there is a reversal confirmation. Okay, so now you know where to sell, and now you know where to enter. Okay, this is what we're saying as oversold and overbought periods. Next case study, okay, last case study for this oversold and overbought. Okay, first again, we look for the overbought regions. This is a very, very good trend you see from Hata. You will see the trend is actually trending downwards. You don't know where you can sell, you don't know where you can buy. So in this case, you open up your indicator, your stochastic indicator. Remember to add on the volume as well. Okay, remember to add on volume. Always include volume in all of your charts. Okay, it always include volume in all of your charts so that you're able to read all the volume. When is the buying or selling pressure along with the volumes, and we will be able to identify whether it's a false breakout or whether it's a true breakout. So this is the use of the volume. Okay, I don't give you an answer first. Maybe you can have a look and you have an own study. Okay, where is the overbought regions? This is very simple, right? Okay, the overbought region is below 80. Okay, we look back at the very first April, from April to May. Okay, we can see that it's actually the rebound from the oversold regions. Okay, rebound from the oversold region along the way to the overbought regions. Okay, which is the high, which is this level. Okay, they have rebound from this low to this high. So that's what we say as a overbought regions. Okay, so you know your overbought regions, then you will be able to identify when are you going to take profits, or when are you going to cut loss? Okay, you look for the resistance level. So the resistance level will be at roughly like 11 ringgit. 11 ringgit will be your resistance level. Okay, you will see the reversal signals here, the reversal candlestick here. So from this point, you will see that it's actually a resistance which they are not able to break out. Okay, and for the confirmations, we look at the stochastic. How we look at the stochastic? Overbought regions. Okay, resistance, reversal confirmation. Just like I said that stochastic, if let's say trading below the blue and red line trading below 80%, we might be considered to take profits. Okay, this is how sometimes stochastic will be very sensitive to the pricing changes. So you have to take along with the candlestick pattern. Okay, let's say you don't know what is the candlestick pattern meaning, then you can go to our video. We have candlestick patterns video along with in our page. Just go through the system. Go through the video, and then you will know the candlestick pattern. Okay, you have to add on with the candlestick pattern. You have to add on with the volume, and then next you add on with the stochastic. It will be perfect. Okay, it will be perfect. So once you are able to identify the stochastic level is actually showing you is overbought and it trading below 80, it means that the selling pressure is getting higher and higher. Probably you can take profit first. Okay, you take profit first and we monitor it for the confirmations. You will not be able to know your decisions is right or wrong until there is a confirmation. So in trading, there's no right and wrong. Okay, but technical analysis will able to help you to add on more accurate decisions, more reference for your decisions, so that you're able to study all the chart patterns and all the price movements. Okay, so this is the use of the stochastic indicator. So next, we will be going through the stochastic crossover. Stochastic crossover, this is another strategy that we can use based on the stochastic indicator. Stochastic crossover occur when the two lines cross in an overbought or oversold regions. Okay, when the two lines that I mentioned you just now, we're saying that it's a red color and blue color line. So it will be red or blue color line. Okay, so when the stochastic line cross below the trigger line in an oversold region, it is generating a bullish reversal signal. Alright, when the stochastic line cross below the trigger line in an overbought region, this is a bearish reversal signal. In other words, it's actually trending uptrend, or trading downtrend. Okay, so this is the stochastic crossover. Okay, in a trend following strategy, trader will monitor the stochastic indicator to ensure that it stay crossed in one direction. This is show that the trend is still valid. This is the strategy for the trend following. Okay, let's go to the case study. First, we look for the overbought regions and resistance level. Okay, D and O is actually there's a lot of overbought regions and resistance level, so you can monitor it at your own. But we go to the very first periods. Okay, we go to the April 5th of April. This oversold regions. This overbought region. Above 80 is overbought, below 20 is oversold. Okay, I have repeated it many times because it's very important. Above 80 is overbought, below 20 is oversold. Overbought region, we identify it. What we do next, we will be identify the resistance level at the period of time. How are we going to identify the resistance level? We use the higher high, and when we use the higher high, we can compare to the past for the past charts, whether it's a real higher high or it's actually a support lah. So this is based on your own charges. But here I use this level, roughly like 5 ringgit to make it as a resistance level because it's not able to break down once it go through the higher high. Okay, so look for the cross check for the second step. Okay, first step we look for the overbought region and resistance level, which we have been done. Second step, we check for the crossover at the overbought regions, meaning you will see that the blue and red color is actually crossing. How we can identify? if let's say you you are in front of your computer, you can enable it, and you'll find out that some of the chart is different. But in M plus, you can see that it's actually the blue and red line. Okay, when the red line is actually the blue line is actually closing below the red color line. Okay, we make it short as B and R. Okay, when B cross below R, okay, B stand for blue, red stand for R. Okay, so when the B's cross below R, we will see saying that it's actually showing a selling pressure. So meaning at this point level, it closed below the B closed below R. Then at the overbought region, we're saying that this is actually a bearish close over. Okay, B close below R is bearish close over. So in different kind of charts, there will be different color. So in this, you have to remember one thing. You have to know that when the stochastic cross below the trigger line, which is the percentage D, okay, percentage K close below the percentage D, the trigger line, it will be showing a bearish close over. So this is the point where you will be considered to take profits or exit for secure your profits. Okay. So once we have the reversal confirmations, okay, with bearish crossover at overbought regions, we have the reversal confirmations based on the candlestick. Okay, this is what we have in the crossover things. So one example will not be enough. We go to the second case study. Again, step one, we look for the oversold region. So just now we have the overbought. Now we go to the oversold. Okay, outcome today limit up. Okay, so congratulations to those who have entered. Okay, today will be a very happy day for you guys. Okay, we look back outcome from June 21st to the June of 28th. Okay, we identify it as oversold regions. And we look for the support. Just like I mentioned that during the oversold regions, we can look for the support when it touch points of level at this kind of thing. When we saw this outcome is actually roughly like 0.41. It's actually touched 0.1 and then they rebound back, touch the 0.1 and rebound back, it forming a very strong support line over here. So this is the support that we'll be drawing. Okay, if let's say they are not able to break down the support line and it's still in the oversold regions, meaning that it's actually forming a support level. So in this kind of situations, you will have to do, you will have to add this kind of stock into your watch list and monitor it nearly every day. Maybe in the morning, you can monitor it whether there's a breakout or not. Okay, so we look for the support and we check for the crossover at the oversold regions. Okay, when we enter when there is a bullish crossover. So just now we mentioned that in bearish crossover, it's actually the blue line closing down the red line. Okay, so it form the B close down the R. So it will be forming a bearish, but vice versa for bullish crossover, what will we do? Okay, just vice versa. So just now B close down with red but now is the blue close up to the red line. So in this case, it will be vice versa. Okay, it will form a bullish crossover when the blue color line they close above the red color line. So we'll see a close above here, right? Okay, it's starting to close above when it triggered to the support line. It's starting to close above. So in this point level, you monitor it, you put into your watch list, you will not able to miss it. Okay, remember everything that you saw, everything charts that you think is nice, and every stock that you think is potential, put it into your watch list. In our M Plus watch list, you can put it up to a lot of folder, but every folder there's a 50 limit. Okay, just put it into a watch list and name it as many name that you want. Okay, so when is the entry point? We look for the confirmations. So first, we say that the bullish crossover at the oversold regions, right? We will be entered at below the 20%. We might not be entered below 20%. We will be entered when it above 20%. If trading above 20%, we might be considered to enter it, give it a try, and there's no harm, right? Give it a try, and you can study it whether your decision is good or wrong. Okay, your decision is good, then you will be earning. If the decision is wrong, then probably you can set a cut loss at the support level. Okay, always remember to put a support and resistance level at your own. Okay, stochastic indicator is actually an indicator for you to do the study of the oversold and overbought regions. So one of the things that we can see from the crossover is that bullish crossover at the oversold regions, it might be potential to have a rebound. Okay, it might be potential to have a rebound. So we might giving a try over here, we enter and wait for confirmations. Okay, so this is what we have in the stochastic crossover in the oversold region. So next we go to the case study 3. Okay, case study 3. Hexstar, just now we mentioned. We look back the oversold regions. Where is the oversold regions? We look back, I will go into the July here. Where is the oversold regions? The oversold region will be here. Below 20 is oversold regions, and we will be drawing a support line. We'll be drawing a support line. When it charge the price, it's not able to break down, it keep going statement over here. Okay, it keep testing the support line, then this will be the oversold region with the support level. And then we check for the crossover at the oversold region. Okay, we see the crossover at this oversold regions. So when you see the crossover where the blue color line close above the red color line, then we consider it as a bullish crossover. Okay, as a bullish crossover. When are we going to enter? We enter when it above 20%. We enter above 20%. Okay, we are giving a test after the break above 20%. If let's say below 20%, I will still not consider to go in yet. It might be still considered the statement. So I will not give it a try. I will probably wait until it close above the bullish crossover is actually above 20%. It has been escaped from the oversold regions. Then only I will go in. Okay, and we have the reversal confirmations. Okay, we have the reversal confirmations until they go to the overbought periods. Okay, this is how we can do for the bullish crossover. Okay, so as conclusions, the stochastic indicator is a good technical analysis tool that can be used to identify overbought and oversold positions of a particular stock. Okay, so there are some weaknesses on the stochastic indicator as well. First, it works well in ranging trend, but it not work well in the trend. How you can see, let's go back to this. Okay, let's go back to this. How we can say that it's actually not well in the trend riding. So when we see that it's actually when in riding in the trend, you will notice that the stochastic indicator will always trading at the oversold periods, oversold regions. Okay, overbought regions. Above 80 is overbought, below 20 is oversold. So when you look at this, you draw a resistance of yourself. Sorry, let me erase it. You draw a resistance of yourself. You will see that it's actually trading at the resistance level. So, and the stochastic is actually trading at the overbought regions. So here we might be saying a statement where it's actually not work well in the trend following. Okay, a statement meaning that it will still consider to trading above the overbought periods, overbought regions. So until it has a confirmation of the pricing changes, the momentum, add on feel of the volumes, everything, then we will be saying that it's actually showing a crossover, everything lah. So this is the weaknesses of the stochastic. Next, it is too sensitive to the price movement as well, where it might giving a false indicator. So just now we mentioned that in the stochastic, let me go through here. I saw a few. Okay, we look at the outcome. So sometimes we see that we look at the periods of here, August of 9 to 6th of September. It might be giving you a false indicator as well because it's too sensitive to the price movement. So sometimes we were saying that we have to add on few of the we're saying that we can do for the few of the indicator, add on with the volumes and the chart patterns and even the candlestick patterns to identify whether it's a true or false breakout. Okay, in this level, you see that although it break above the resistance, the break above the oversold regions, but the stock price is actually trading at a very very low length. It's actually trading around like 5.2 to 5.6 level on it. So it's actually statement, but the stochastic periods is actually showing that it's actually close above. So in this level, we might be confused whether our decision is good or not. So we have to add on with some of the others indicator like RSI, which will be we will be talking next few sections, and the MACD as well to make it more accurate. Okay, because we are not able to use only one indicator to do for all the tradings. When we add up all the indicator that we have, we know we will be able to identify it at the end of the level lah. So that's why we come up with the ASMR this kind of classes for you guys to know. Okay, so third one, as a conclusion, it can be combined with other indicator to help investor identify the trend reversal, support and resistance level more accurately. So stay tuned to our next webinar, which is the trading analysis series. Okay, now we're going to have the Q&A sections. Let me check on the Q&A. Let me check on the any question that you want to ask. Okay, because we have some of the time. Okay, so those who want to open account, we are now offering online account opening. So just visit to our website. If let's say you have any question, just check on our website for the registrations. Okay, or you can just inbox or PM us for more informations. Okay, if the blue line is above the red line, is it that will be rebound? Okay, we use this example. Okay, we use the example. If let's say you're saying that blue line is above red line, so we're saying that it's in the oversold regions. Okay, it's actually in the oversold regions. Not necessarily will be rebound, but when we identify that it close above, just how I mentioned that it might give you a false thing. When it close above, we might consider to enter it. Okay, it might be showing some buying interest over here. That's why it triggered the stochastic to cross above 20%. Okay, so that's why the blue color line is actually trading above the red color line. So we might be considered to enter it. And if let's say we are wrong, then we set the cut loss at our support line. Okay. So not necessary, but it will giving you when it cross above 20%, okay, the blue and red color line cross above 20%, then it will be showing a buying interest. Then you might be giving a try on it. Next question, let me check on it. Yeah, there's another question not. Can we use top glove as a case study? Let me see. Give me some time to change my hold on. Since we have some time, okay. Oops. Okay. Are this stochastic better used to entry only? Not necessary. You can use it as a exit level as well. So just now we have the bearish crossover and we have a bullish crossover. Okay, we can use it as a exit level. So if let's say they drop below the 80 over the overbought regions, meaning that the selling pressure is very low, is very high, so you might be taking profit at the below 80%. Okay. And if let's say the entry level is when they close above the 20%, okay, this is the rules lah. So we look at top glove. Just now we have top glove. I might not be able to answer all the questions, but we'll try my best lah. So we come up with the stochastic first. Stochastic first, okay. Let's check with the top glove. Okay, just like I mentioned that in the conclusion, we're saying that actually the stochastic level is too sensitive to the price movement. That's when we going have a trend movement like this, trend moving like this, we are not able to identify it correctly. So you have to check on your own, meaning that you have to draw your own support line first. First, identify the support and resistance line. Okay, support the resistance line. Let me take on this thing out first. Okay, we get a lower low, lower low, and lower low. We draw a line like this. Okay, we draw a line like this. When touching a point like this, we get it as a lower low. Okay, when you see over here, stochastic is actually showing you some of the regions. We go back to the August here. You can see that it's actually in the overbought region, right? This is the overbought regions. Let me draw. It's in the overbought region. So it's showing some of the selling pressure. So in this level of point, we will be enter. I will be monitoring first whether it can sustain above the 80% overbought regions. Okay, if let's say they are not able to sustain, the possibility to go down is very high. So once we're seeing that the stochastic is actually showing a pullback and the crossover, you can see that the blue color line is actually close below the red color line. So when you see that the crossover here, probably you might be setting a cut loss on your own, whether the cut loss point, how much you want to cut loss, okay, at here, this kind of level. And when we saw a regional here, we saw a regional over here at the overbought regions. Okay, next region, we overbought regions, oversold region here. Okay, we might consider to take as a, we will be, okay, just like I mentioned, things is you have to identify your own overbought and oversold region. Second, look for the resistance and support. And third, look for all the informations. Okay, so here we make it as a support over here. There's a strong support over here. Okay, at around like 370 cents, it going down and it touch again and it not able to rebound and it pull back to the support level again. So this is the regions of overbought and oversold. Okay, so hence when it comes to the overbought region, because stochastic is very high, very sensitive to the price movement, that's why you can see that it's actually very sensitive to the, although the stock is actually rebound a little bit, but you can see that it's actually stochastic showing that it's in the overbought region already. So here, if let's say cross above, cross below, we will be exits over here. So this is the use of the stochastic. You have to identify the overbought and oversold region. Okay, overbought, oversold region. Overbought, oversold region. You identify your own support and resistance. And then you add on with all the crossover. Okay, in this case, then you will be identify whether it's a good entry price or whether it's a sell entry price. Okay, so this is the use of the stochastic. I think that's all. Okay, if these charts in M plus is actually free, okay, feel free to open it up and then study with the stochastic. Okay, next we have few kinds of tomorrow we have another study as well, another cases studies, which classes which will be teaching you another way of the technical analysis. So just join us for more informations. So if any of the classes that we have in the Facebook, then it will be showing in our Facebook page. So if let's say you have any question more, then you just put it into the comment box and I will comment when I have time. Okay, so I will try my best to comment, and thank you for your times today, and I hope you guys have learned something new. And if let's say you have any question, just drop into comment box. Thank you very much.